This bar chart tracks the top 10 richest families in India, starting in 1990. At this baseline, the spread is relatively tight, and the Tata family holds the #1 spot with $2.5 billion. Ratan Tata represents an economic reality defined by legacy conglomerates. They built steady wealth by operating within a tightly regulated, mostly closed national system. Then, Finance Minister Manmohan Singh opened the doors. The 1991 liberalization, privatization, and globalization reforms tore down the protective wall surrounding domestic markets. A successful local business no longer guaranteed staying at the top. The rules shifted, forcing these families to navigate unpredictable international market forces. This shift effectively tied the net worth of India's legacy dynasties to the same global forces governing the Dow or the Nikkei. Fast forward 10 years to the year 2000, and we see the first external shock hit the rankings, the peak of the global dot-com bubble. This line graph shows the impact of a surge in software demand. Azim Premji's wealth spikes vertically from $3.5 billion to $7 billion in a single year, pushing him past the Ambanis to the #1 spot. Premji embodied a new pathway to wealth, one built on international demand for digital services. By 2007, the economic driver rotated again as a prolonged commodity supercycle took hold. Looking at this chart comparing Lakshmi Mittal and Mukesh Ambani, we see a different order of magnitude. Their side-by-side growth dwarfs Premji's previous peak, pushing Mittal to $45 billion and Ambani to $43 billion. Mittal's global steel empire was positioned to capture this sudden surge in material demand. Wealth leadership in this era favored those who controlled the specific raw materials demanded by the global construction boom. That momentum stopped abruptly during the 2008 global financial crisis. This year-over-year bar chart illustrates the immediate financial devastation. The top Indian billionaires lost over $50 billion combined, with Mittal and Ambani both watching half their net worth vanish in a matter of months. It took years to recover, but by 2016, Mukesh Ambani launched Jio, capturing the domestic telecom sector right before another major macro event. When the COVID-19 pandemic forced physical economies into lockdown in 2020, conglomerates specializing in digital and logistical infrastructure saw their valuations accelerate. This line chart tracking the pandemic years shows Ambani and Gautam Adani breaking entirely away from the rest of the group. As they consolidated digital and infrastructure holdings, their wealth lines shot past the $100 billion mark. By controlling the digital networks and physical ports essential for a lockdown nation, these families saw their valuations climb even as physical commerce ground to a halt. These trends aren't the only forces capable of moving billions. Between 2017 and 2020, Azim Premji made a voluntary decision to give away $7.5 billion to charity. As this step chart animates, you can watch a substantial portion of his total wealth physically leave the board. He drops from #2 down to #9, handing a fortune back to the public. 2 years later, Gautam Adani faced an involuntary shock when a short seller firm published the Hindenburg Report. This line graph visualizes the fallout. Adani's net worth falls off a cliff, plunging from a $120 billion peak in 2022 down to $55 billion in 2023, the largest single wealth crash ever recorded. At this scale, a single philanthropic choice or a single financial scandal carries the mathematical weight to reorganize the entire national hierarchy in a matter of hours. This comparison shows the shifting baseline. In 1990, the top spot was $2.5 billion. By 2026, Ambani towers at $122 billion. Even the floor has risen. The number 10 spot today is $6 billion, more than double the absolute richest family 30 years ago. The numbers on this list don't represent capital sitting stagnant in a vault. Billionaire wealth at this level behaves more like a living, reactive organism. It survives by rapidly expanding, contracting, and feeding off global market turbulence. The families topping these lists didn't simply inherit a fortune. They learned to absorb and capitalize on sweeping macroeconomic shocks. The only certainty is that the hierarchy will shatter again. We're just waiting for the next global catalyst to strike.